Hello. By the time you are watching this video, you should have gone through all of the lectures and the instructions for Application Project 1. I'm going to try something a little different. I am going to walk you through the application project, doing it for a live company that I'm following, Arris International. So what I am going to do is I'm going to go through the process of doing the application project. Now, I always see this as 3 steps. The first step is gathering information. Second is putting it into a format that can be used. And then the third piece is analyzing, asking the questions. So 3 steps: get the information, then organize the information in a meaningful way, and then number 3, interpret it. What is it telling us? So with that, let's keep going and look at the first part of the project. So what the first step is to use the 10K proxy or investor presentations to answer the following. What's the full legal name of the company? What is the most recent fiscal year? What does the company do? What are the company's products and services? Be specific and detailed. Who are the customers? Who are their competitors? What is their competitive advantage? What makes them different? What are strategies they're using to grow their business? The first step is to go to the website for your company. And I've given you the link so you can go right there. So let's take a look at what I'm going to do. Okay, what I've done is I've gone to the investor page. When you go to the investor page, it is intended to give you information, to give the public information. Remember, these companies are publicly traded and they have disclosure requirements by the SEC. So the first thing that you're going to see on most pages is you're going to have recent news. And in this case, they announced their preliminary first quarter results on 5/3. They had new product coming out, new satellite receivers. Then what you're going to find is oftentimes you're going to find a stock price, a contact information, where they're based. This one is based in the UK. And then there's going to be an investor overview. That's the page we're on now. You can look at corporate governance, responsibility. Now, we can get into financial reports, but we're going to go to SEC filings because that's one of the first things we're going to do. And we're going to look at presentations. So let's take a look at the SEC filing. And when you come on, it's going to ask you which ones. And the one is we want, not all forms, we want annual forms. So we're going to do a search. And there's the 10K. Okay. It's available in Word, Excel, PowerPoint, and in this one. Now, what you're going to want to do to start is to click, and what's going to come up is the 10K. This is the form that's filed with the SEC. So what we're going to see is the name of the company, Arris International. Their last fiscal year end is December 31st. Now, when we work our way through the 10K, you're going to find an index. And what that does is it talks about, we're going to look at the business, because that's the first thing we're trying to do now, is understand the business. So I'm clicking there, and what it does is it's going to walk through and tell me what all these glossary of terms, because they have a lot of different products, and it's going to walk through what the business is. It's a world leader in entertainment and communications technology. They do hardware, software, and services across the cloud, network, and home to power TV. So that's where I'm going to start. So I'm going to read the whole thing on their strategy. Okay, this is what they're doing. So I'm going to read that. So once I read all of that, and here's a chart of all of their products. So we're going to go through this. We'll know what customer premises equipment is, network and cloud. So I'm going to read that. So I'm going to get an understanding of what they do from this. That's going to enable me, if we're going right back up here to the 10K, it's called business. Every 10K has it. So first you get the information, which means read. Okay? So that's the first step. Next is you can take a look at presentations. Many companies, and all the companies you have, do investor presentations. These are presentations the firm makes to different investor groups and shareholder groups. So the first thing I'm going to do here, the most current one, is an investor day. This one is talking about the first quarter conference. We want to take a look at this one. So it's the investor day. And I'm going to click on that to download. And what it does, it gives you, first it's telling you they're talking about the future and there's certain disclosures. They're going to talk about what's happening in the industry, segments. They're going to talk all about what they do, the key messages, what's their strategy, okay? This is what they're going to do, okay? And I may not necessarily understand it all, but I'm understanding what it is that they're going to do. It then walks me through the management, so I have a sense. It gives me some public relations stuff. Talks about their key strategy, which is expanding business internationally. Okay, they did a merger, and they talk about the market, and now they're talking revenue, so that you can see what it is, and then they talk about the future. So what we have here in this big slide deck is really more information to complete part one. Okay, so what I'm going to move now is I'm going to show you, after reading all of this, this is what I came up. Okay, so now I went through the investor presentation in the 10K. I read about the business, and what I did now is I am putting my first page together. As you can see, I indicated the legal name of the company right up here. I indicated their most fiscal year ending, and I've started to label it financial analysis, my name, and the date. Everything you do should have your name on it so that we know. The first question is what does Arris do? And they're a world leader in entertainment and communications technology. Most of you might have one of their products in your home, at school, and that is they combine hardware, software, and services for both the cloud, network, and home to really power TV and internet for millions of people. They're the #1 residential Wi-Fi and broadband in the U.S., #1 in public access Wi-Fi equipment, and #3 in enterprise wireless LAN. And they operate in two business segments. Customer premises equipment, that means the actual equipment that a customer has, network and cloud. So they enable providers to deliver media, voice, and IP data service. They produce inset tops, digital video, IP television, distribution system, broad-based access infrastructure, platforms, and broadband data and voice. So that's what they do. Okay, so that's what the company does. Looking at it now, there's their products. Okay, so you can see the products now that they have, and customers. So when I look at customers, they've defined their market by cable, and you can see the different cable companies. Telecom producers, they have equipment that's used for telecom. They have equipment that's used for satellite, for programmers, those that produce content, and the retail partners. So you and I buy from these retail partners. So those are customers that they define. There's the competitors. The three big competitors are Brocade, Ciena, and Ubiki. What is their competitive advantage? They have a strong international presence. They are state-of-the-art technology. They have expanding their offerings in wireless and networking through the acquisition of Ruckless Wireless, and they're very diversified. So that's what they are. Their strategy for success, as I found, they're increasing their global presence by expanding in adjacent markets to where they are today. They're going to expand their technology breadth and depth with a focus on broadband, video, and mobility. You can see some of the things they're doing there, utilizing scale, service, business. They're going to drive market upgrades to technology as opposed to reacting. And that's when I shared there's a couple of specific things they're doing in cycles. To me, I don't understand it, but I don't need to, other than I know that they are working on upgrading technology. And that's key to keep things moving. So that's the first slide. Let's move on then to the second. Now that I have an understanding of the company, their products, their services, their customers, their competition, or their strategies, we're now going to move into the financial statements themselves. Because what we want to do is look at what's happening in the company and now start to relate it to the financial numbers so that we can understand. And this we do for a number of different reasons. We do this to understand from the firm's perspective, what is the performance of the firm, how is the firm doing for its stakeholders. We're also doing it for users of financial information. We could be making a credit decision around the company, decide to lend money, to underwrite a bond offering. We might want to make an equity investment. We may want to purchase the stock. We may want to buy the company. So we're doing this for a number of reasons. Now, so what I want to do is I want to push a little bit here, and I think we should use Excel. And what we're going to do is we're going to start by extracting data. As I said, we're first going to get data, then we're going to organize that data into something meaningful to do some analytics, and then we're going to evaluate it and see what it's telling us about the past and what indication it might have for the future. So I'm back here on the website for investors, and I want to get my SEC filings. So I'm going to click SEC filings, and again, I'm going to want to get annual, because that's all we're dealing with at this point, annual filings, search. And we can see that there's a number of 10Ks. There's other reports in there, but what we're trying to get is 10Ks. Now, I already showed you how to download that, but I want to take it now in Excel. I've opened it in Excel, and what this is an Excel format of all of the schedules and the information. So what we want to find is right here, in this case, let me just highlight that for you. What we're trying to find is the consolidated financial statements, which is on page 76. So we're going to go down here, and there's a lot of different stuff. Net sales, operating, corporate, other, non-GAAP measures, non-GAAP, liquidity. Look at all the information that we have out here. Let's start with the balance sheet. So we're going to click on balance sheet, and what that's going to do is it's going to tell us what is going on with the company. So what I'm going to simply do is I am going to copy this, and I am going to put it into a worksheet that I set up. Now notice I've only brought in years 2016 and 2015 on the balance sheet. So we've now brought all of this information over, so we now have it in our document. So I would suggest that you set up your document for your company where you can bring in the financial data. So let's go back over to the 10K, the income statement. So we go back over to the income statement, consolidated statement of operations. And here we see we're getting 3 years. So I'm going to just copy this. Now I want to bring in the consolidated statement, their cash flows. See, that doesn't tell us everything, so we actually need to go back here and bring the rest of it over. What I've done now is I have brought in the financial information from the 10K into my worksheet. So what we want to do now is let's go, we need more data, because we only have 2 years here and we have 3 years here. So what we're going to have to do is to go back and get the next 2 years. So what I've done is I've moved on to the next section, and what I've done, we're looking for sales, revenue. Sometimes people use different words, but they're the same thing. Then we get into net income, earnings per share, balance sheet, and then we want to compute the PE ratio. So what I've done, by bringing everything in, what I can do is I can take, and I've highlighted everything I need over here. There's my sales, so I'm going to bring that in. Okay. And then I am going to go and bring the data in for all the rest. So what I'm going to do is just bring that in. So just I'm going to speed you through this because you don't need to see me do this. But basically we're going to go through and we're going to populate this. Now that I've populated it, there's a few things that stand out. One, we can see the growth rate of sales, year-on-year growth. But look at this. It's all messy because there's different format. So the first thing we want to do is get the format looking straight. They all should be commaed. Do we need the extra zeros? No. So we take that out. So what we can see is that sales have really been all over the board, and they've grown first by a lot. And so the first thing is we know what the growth is. Now I'm going to do the exact same thing with net income and earnings per share. So I'm going to go back over here to net income. And this is net income attributable to Arris International. There's some minority shareholders, so that comes out. So we're going to bring that in. Now I'm just going to go and bring the rest in, and I'm going to also populate the earnings per share fully diluted. Okay, we'll get into what that means, but we're always looking at the fully diluted. I'm going to put that in. Then I'm going to go to the balance sheet. Remember, that's we put on the top, and there's total assets. So what I'm going to do now is I'm going to populate that. So just hang on for a second. Okay, I have now populated this, and I'm calculating the growth rate. When I come down to earnings per share, again, this is more meaningful because it's in pennies. We want to just expand it a little bit to 2 decimals. Now, when we get down to the balance sheet, we can tell there's no commas. So we want to put in commas, makes it easier to read. So now, this gives us a very neat schedule that we can use for other things, but we understand what's happened with the growth of the company. So now let's get the stock price. Where do we find that? Well, if we come back over here, the best place, let's see if they actually give us right here, the investor overview. And sure, it closed at $26.97. You can also find that at the Wall Street Journal site. So $26.97. So I'm going to put $26.97 over here. And what we can see is that based on the historical earnings of 9 cents per share, it's selling at a very high PE ratio. Now, that's a historical ratio. People are expecting better performance because if we look, we've gone through net income, made money, lost money, made a huge amount of money, made less, made more. So we know stuff is going on in the company. So this gives us data. So we're still in this point of gathering data. As we go forward, we're going to understand what is happening to drive that. 299.7 is really, really high based on historical earnings or PE ratio. So that's how we do that. So now I'm going to move right into each of these other cash flow. I have set that up. This is exactly what I'm looking for. Cash conversion cycle, I've set it up by that. And same thing with working capital. I've set it up. Free cash flow. So I've set the models up in advance. So all that I'm going to continue to do is to put things together. So let's go to, let's bring in 1216. And what I do is I try to keep the, so that's 1231, 2016. And we know cash flow provided by operations. So we're going to go back over to the data. Okay, so we're going to want information from this. So let's just take 362 is operations, meaning that the company generated $362,495. So let's see what they've done with investments. So we're going to go down here. Investing activity. So they used money. Now what happened with financing? Okay, so I'm going to go down to financing. There we go. That provided money. Is there any other? Let's take a look. Yes, there is this line called effective exchange rates. So we're going to bring that up. Okay, now let's sum these. And of course, let's format them, because sometimes formatting them is a good way of doing that. And you want to put a little lines here so that we know what we're summing. Okay, so now our check is, let's take the cash at the beginning of the period, and we can get that right from the beginning of the year, which equals our balance sheet. So we bring that over, plus, and this, if we check, again, some formatting here, double underscore, we can see that they started the cash at 863. Operations generated 362 in cash. Now remember, they only had $18 million in profit, but they generated all of this cash. They made investments, 524, 290, 652, 12. It's the other exchange rates. Total cash provided, which is the sum of these, and when we put them together, that's the cash at the end of the period. But now we want to look at cash provided by operations. So we know how much was, so I can just put this in here, 362. So, but the question is, how much was attributable to working capital? So we go over to the 10K, and we actually have that right here. It's called changes in operating assets and liabilities. So I'm going to sum them up. Love you.
Love you too, baby.
So that's going to tell us that we used working capital. So money needed to come in to the company for its growth to get to that level of sales. So if you had 362 was the total cash provided, and we used 185, it's the sum of these two that were provided. So that will tell us when we look at this, cash provided used by working capital, that's the increase in the needed to increase the net assets of the, needed to provide, they needed to increase their inventory and accounts receivable. So we want to break it down that this is the total number right here. So if I'm just, let me just take my pen. And we take a look at this, they're the same number, okay? But we go take this is the change in working capital. That's money they needed to make the cycle work, okay? So now I'm going to go back, and I'm not going to bother you with this, but I am going to go back and populate that now, so just hold on for a moment. Okay, what you can see now is I've populated this, and we now have an understanding. Remember, cash flow is the lifeblood of the organization. Cash comes from operations, comes from investing, and it comes from financing. So we got to look at the relationship of them because different things are happening that are generating the cash. Understanding where the cash comes from and how it's used is critical to understanding the company. So now we can take a look at this and we can observe some things that we're going to have to research. Like we're going to want to know, what did they make this much investments for? 524 million, $1.8 billion. Okay, then $1.6 billion in financing. They're all separate activities. We need to segregate them out because we look at them in a different way. You can't put so much into a big number. You got to spread it out to make it usable. Let's go back over to the cash conversion cycle, and I'm going to walk you through the first one of these in 2016. And essentially, we start with inventory. So I'm going to go to inventory, go to 10K. I'm going to go to the balance sheet, right up on the top. And there we see inventories. Okay. So I'm going to pop inventories in. And the next thing is cost of goods sold. So I'm going to go over to the income statement, because that's where cost of goods sold is. I'm going to go to the income statement, cost of sales. There we go. I'm going to put that in. Then I'm going to take the accounts receivable. So I'm going to go to accounts receivable, which is right on the balance sheet. Net of allowance. Okay, then I'm going to take sales. And again, the sales are going to come from the 10K, or I could take it from here. And now the accounts payable deferral. So I'm going to pick up the accounts payable. Going to go to the balance sheet. Count. And I'm once again going to put cost of goods sold. I'm just going to bring it down. So what we can see is in this model right here, and I'm going to highlight that for you, that the cash conversion cycle takes about 37 days. Okay, so now I'm going to go back and populate the rest. This is telling us, again, that this is the time it takes for the working capital cycle to operate. Okay, so I'm going to put you on pause for a second, and I'm going to go do that. Let's see what it looks like. So I've now populated everything in the cash conversion cycle. So what I'm able to do is look and see we're pretty much the same for 2 years. And then when we get down here, we're looking at a slight decrease. And we can see that what's happening is that the accounts payable deferral is growing, meaning that they're paying suppliers a longer period of time. When we go out into the last year, we see that what was happening is that we had a lot of accounts payable. So this gives us a sense. That's the cash conversion cycle. We move on to working capital. And remember, gross working capital are current assets that are used in the operations, not investments, because they're for the future. So let's just take the cash. So these are really going to be these other items. So I'm going to take this. And then when I go back and look at the balance sheet, because that's where all this is, there's cash and cash equivalents, and then there's short-term investments. We only want that cash number, okay? So we see there's 980. Now we want to pick up the accounts receivable. Okay. We know inventory is part of the working capital cycle, because working capital is what's there. So we're going to pick up some that. And then we look at prepaid and others. So let's just go look here for a second and take a look. We got prepaid income taxes, prepaids, other current assets. So we're going to sum them up. None of them are investments. So let's just take these right here. That's 200. And let's put that into our working capital. And we can see that we have $2,891,094 of gross working capital. This has to be funded. Okay? When we go into capital structure, we're going to look at how you're finding that. So this is what the company needs to make that cash flow cycle work. So I'm going to populate that. So hold on. So I've now populated them, but I want to go back again. This is working capital that's used in operations. So what have I excluded? If we go over to the balance sheet here, I have excluded this, okay? And I've excluded it because it's not part of the operating cycle. This is short-term investments. They're not part of what's being used. Other receivables, I've not included that, because I'm only looking for receivables that arise from the operating cycle. This is from something else. And then I've picked up all of these prepaids under the assumption. So what I've not picked up is the investments and the other receivables. I wanted to call your attention to that when you read your balance sheet to see what's there. So then we're going to move on and do the free cash flow. And once again, I set this up so that I got everything ready. I created my structure, and now I'm going to pull the information in. Cash flow from operations, where are we going to find that? We're going to go right over to the cash flow statement, cash flow provided by operations. I'm going to put that in, less capital expenditures. Where am I going to find the capital expenditures? Let's go take a look at the cash flow statement. So we're at the cash flow statement, and that's going to be investing activities. So when we look at investing activities, which are right here, let's say purchase of investment, is that capital? No. Sale of investments, No. Is purchase of property, plant, and equipment? Yes. Purchase of intangibles? Yes. Acquisition? Yes. Okay, so we're going to add them up, and $412. So what we're going to do when we look at our free cash flow, we're going to pick up capital expenditures. So we're going to go pull that back. And we can see that the simple cash flow was negative. Now, they made a big acquisition. So they took cash from operations, but they couldn't pay for it all from operations. So the simple free cash flow. Now, that all moves itself down. And let's keep working on this. And let's put in the interest expense. So let's go find the interest expense. And we can find that in one of two places. It can be on the interest expense there. We find it right there. So it's 79. But there's a tax benefit. So when we put in the interest expense in the funding, free cash flow to the firm was about 5.9. Now we need to come down to free cash flow to the entity. This comes down. This comes down because it's the same thing. It didn't change. And then we go to net borrowings. And net borrowings, we're going to find, if we go to the cash flow statement, and we're going to just look at this. This is the area that we're looking at. And let's, oops, sorry, go back. Let's go back and take a look at that. Put another color in here. Let's see. Shares. No, that's not financing. Shares, not financing. No, no, no. Issuance of debt. And then they pay debt back. Okay. Financing operations. Yes. Accounts receivable financing. Payment for fees and debt discount. So now let's add that up and see what happens. So 453 were net borrowings. So let's go right back over here to free cash flow. And we can see that the free cash flow to equity was there. So what I'm going to do now is I'm going to populate that, come back with the closing one, and then you're going to be on your own. So now you can see that I've populated. There's a lot of big numbers. So the question that once we see, we got to stop. And then we say, what do we need to know what happened? What is this? What's that? What happened here? We know that there's a relationship between the financing and the acquisition. So this gives us a sense of what's going on. So the first part in this finance is calculating the numbers. What are the numbers? What do they mean? But more importantly, how do you get them? How do you gather the data? How do you put it in? How do you start looking at it? It's trends. So with that, what I've done is I've given you a lecture. I've walked through Geneseo Coffee Company with you. I've now gone through Arris with you. So now it's up to you. Go to your assigned company and you complete the assignment. Please let me know if you have any questions.